What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be going over if buying a pre-construction condo is a good investment or not. I will go over a pre-construction condo that I was very close to buying here in Toronto, Ontario, Canada. Of course, with real estate, your results may vary depending on your location. I mentioned the importance of diversifying across many different stocks on this channel, but I also want to stress the importance of diversifying across asset classes, i.e. investing in real estate. You see, real estate is a very special asset class, and I go over it in more detail, and I'll leave a link to that video in the description below. But the gist of what makes a house so special is that unlike a car, the price of a house will appreciate over time. And unlike a fancy new watch or car or jewelry, housing will always be an essential need, barring substantial changes to government policies. And to top it off, both American and Canadian governments give extremely favorable borrowing conditions specifically made to buy houses, known as mortgages. In this video, I will detail one specific pre-construction condo in downtown Toronto known as 55 Mercer Street. The basic pitch of this pre-construction condo was that it was in a prime AAA location in downtown Toronto. It's about a 10-minute walk from St. Andrew subway station and very close to top tech companies in the world such as Google and Shopify. This is a main selling point for this condo because it makes this area in very high demand by young professionals with high income. However, I did read recently that Shopify is moving to a completely remote business model after this whole situation is over. Even so, there are many other differentiating factors for being downtown, such as being near Union Station and other downtown establishments. The building company for this condo was Center Court, and while they are not the oldest company around, they claim to have the highest sales in 2019. It is very important when buying a pre-construction condo unit to buy from a reputable builder because more often than not, the project does not finish or runs very late and goes over budget. This happens more often than people realize. Other things to consider when buying a pre-construction condo is whether the levy fees are capped. Levy fees are charges made by the government to build things like parks and schools, and it's charged by the government, so you really have no control over this amount. I believe the levy fees at 55 Mercer Street were capped, but I don't remember the exact amount. The price of the particular condo that I was looking at was $712,000 for a one-bedroom apartment that was fairly high up and about 450 square feet. I'll show the exact layout here, but essentially the bedroom and kitchen had window access and it was a fairly efficient layout. I chose to focus on one-bedroom units because while studios are the best for rental yield, I personally would want to live in at least a one-bedroom apartment. This is just a personal preference thing, and if I ever had to take the unit over, I wanted to be able to live in it comfortably. Something I didn't know about purchasing a condo was that higher up floors cost considerably more. And while this will affect the resale value of the condo, it does not really affect the rental prices that much. The one thing I hated the most about buying a pre-construction condo and real estate in general is that the prices were not very transparent and were solely set by the builder. By this, I mean that the project was advertised from the mid-500s, and that was very different from the final purchase price that I was quoted. And the only way to get an exact price of a unit is to either allocate it yourself by lining up when the condo opens, or you get a real estate agent to allocate it for you. And really, all the best units will already be taken by friends of the builder, so you're really stuck with all the leftovers. I wish they would just publish all the condo prices like how stocks are listed on a stock exchange, but builders want to make the most profit possible, so they list extremely high and only reduce the price if inventory fails to sell out. And when you're in a hot market such as Toronto, Ontario, Canada, pre-construction condos typically sell out. Now the next thing you have to do is figure out how much your mortgage is going to be and seeing if you can rent it out to cover that mortgage or at least come close to covering it. And then you should also compare it to similar resale condos available now. For this particular area, there were not a lot of condos for sale, and typically the 1-bedroom condos around that area came in at around 500 square feet compared to only 450 square feet at 55 Mercer Street. But the time of this pre-construction sale was February 2020, and this was one of the hottest Februaries in real estate history, with condos typically selling for 10 to 15% over asking price. So to get a 1-bedroom condo apartment in this area was gonna run you at least $550,000 to $600,000 minimum. Purchasing the pre-construction at $712,000 with an occupancy date of January 2023 means that you would have to find something comparable for $580,000, assuming an appreciation rate of about 7% annually. Speaking of occupancy dates, the earlier you get in on buying a pre-construction condo, the better price you will get, because this is when the project is at most risk of not getting completed. And it's also important to look at the payment structure for the down payments. Before, condos would only need about 5% right away, and the rest of the 15% of the 20% down payment could be paid closer to the occupancy date. But for 55 Mercer Street, it was 5% right away, and then 5% in 90, 270, and 540 days. So in about a year and a half, you had to have the full 20%. It is also important to look at common amenities and maintenance fees that the condo has. 55 Mercer Street came with an outdoor basketball court and a shared working space. I believe the maintenance fee was around $300, which is not too bad, and considering most of the units did not have balconies, they did not have to maintain them. In conclusion, when buying a pre-construction condo, you should check for the builder, check for levy fees, check for maintenance fees, and get a real estate agent as close to the builder as possible. Also, you should be aware of the closing date, down payment structure, and other similar properties in the area. As you can see, this is a lot more work than simply researching and buying different stocks, and it involves a lot more people. And there are also several other factors that you should consider that I did not cover in this video, such as if it's in a good neighborhood, if it's in a good school zone, and if that area appreciates a lot. Ultimately, I decided not to buy the pre-construction condo at 55 Mercer Street because I thought a lot of the growth was already baked into the price in an already inflated market. This was almost certainly the right decision to make, with rental prices in Toronto dropping recently. That's it for this video, guys. Hope you learned a lot about buying pre-construction condos. Leave a like if this video helped you at all, and subscribe if you have not already. Enjoy the rest of your Sunday, and see you in the next video.